This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm joined by Keith Neumeyer. He is the chairman and founder of First Mining Finance. Welcome, Keith. It's great to see you.
Thanks. Good seeing you again. Twice in one day.
Twice in one day, yeah. So we just finished speaking about First Majestic, and you've just launched a fairly novel company. Can you quickly tell us the business model?
Right. It has just gone public. It went public on my birthday, April 6th. It's kind of nice. And the same day we announced our $30 million financing on First Majestic as well. So that day was quite a significant day. But it was really 2 years in the making. First Mining is a company that I visualized and formulated in my mind over the last couple of years. And I merged together 3 private companies to get the asset base that it currently has. And, it's got 18 projects currently, focused on gold in Mexico, but I want to diversify that portfolio outside into other jurisdictions. So First Mining is basically a land bank or an incubator. It's a business plan is to acquire assets in politically stable jurisdictions, easily permittable countries or regions. We're focused on gold, but it doesn't have to be gold. Exchange-traded metals, copper, gold, lead, zinc, and so on. But it has to be good grade as well. We're not looking to acquire assets that are out of the money. This is not like Ross Beatty Lumina model or Robert Quartermain Silver Standard model. This is quite a bit different. I think most of your listeners would agree with me that this market is broken. The valuations that we're seeing in this market today are absolutely ridiculous. I've been in this industry for 31 years now, and I've been through a lot of ups and downs in this market. And when you can buy gold in good jurisdictions for less than $10 an ounce, there's something wrong out there.
Something's broken.
Yeah, something's really broken. So, we don't need $2,000 gold or $1,500 gold or $30 silver to turn First Mining into a cash machine. All we need is this market to fix itself. So I'm using this opportunity in the current environment to take out companies with interesting assets. We've now done one within a week of going public. We went after a company called Coastal Gold. We did finally win it through a very public battle.
What made you select this asset in particular?
Well, we like it. It's in a good jurisdiction. We believe it's going to be a very important mine in the future. It's good grade. We think there's some blue sky as well. So even though there's about 1 million ounces to find today, we do believe there's some blue skies there on top of that. But it all comes down to trying to get deals done. You have entrenched management. You have situations where maybe it's a good asset, but not in a good jurisdiction. So our team is looking at several potential acquisitions right now. And once the Coastal transaction gets completed in the first week of July, expect to see something else quite soon after that.
Now, how would this model differentiate itself from, say, a prospect generator model?
Yeah, prospect or generator model is more like they'd buy like a grassroots project, something with no ounces on the ground with a geological theory, and they would spend a few $1 million developing an asset or developing a mineral wealth of some kind or mineral asset, 43-101 compliant resource of some kind, and then they would try to find a partner to then advance that project. We're not doing that. We're not doing any exploration, no development, no production. So we're buying assets that there's already definable ounces in the ground today, or where we have a pretty good feel that we can bring in a joint venture partner just because of the geology that we know of today on the asset.
How do you offset carrying costs?
Yeah, carrying costs is a big issue. Our portfolio right now has carrying costs of about $1 million.
Okay.
So we have 18 projects. So when we look at projects, carrying value is one of the top 5 criteria we look at. Jurisdiction, permittability is key. Grade would be the second criteria, and size, of course, is very important. And holding cost is right up there.
Okay. Now, are you going to be raising more money as you go along, or how do you intend to make money?
Well, making money we think will be easy later. We've got a sector, I can speak for First Majestic, obviously, because I run that company. It's a mid-tier company. We've gone through a pretty difficult 18 months, burning cash and producing metal at a loss and so on and so forth. And all the other mid-tiers were in the same situation.
Right.
The majors are selling assets. The mid-tier guys are just now in what I call balance sheet repair mode. It's unlikely that the mid-tiers are going to be too aggressive, coming in buying stuff yet, but a year from now they will, or 2 years from now they will. So, I think we've got a good amount of time here to build an interesting portfolio, and it'll be the mid-tier guys that'll be coming to us looking for projects.
Right.
So we'll be doing JVs, share transactions, royalty retention, maybe some streaming deals in some cases. So that's how we'll be making our money.
Nice. It's really a buy and hold strategy for long-term appreciation.
Well, when you say that, it's partly true. It just depends on which assets. We've been approached already on our portfolio. We're actually in negotiations with 2 companies right now on JVing a couple of our non-core assets. But what I would call our core asset base, we're going to hold on to until that right partner comes along and we can do a really good deal for First Mining Finance shareholders.
Excellent. Well, thank you so much for stopping by and giving us the update, Keith.
Well, thank you very much.